Hi, this is Mike Andrick for BreakingCall.com. This is being recorded Sunday evening, September 22. We got a pretty ugly sell-off on Friday after the knee-jerk reaction to the non-taper, raising concerns that irrational exuberance may have returned to markets. Bulls argue there's a lack of excessive bullish sentiment that is normally seen at major market tops. Point noted, but there have been times when market participants were rightly hesitant to throw caution to the wind and chase the late stages of a bull market due to legitimate fundamental concerns. This feels like one of those times, and Friday's selling could be just the beginning of a volatile period as investors are about to be treated to the spectacle of our illustrious public servants allegedly managing the public finances. The looming government fiscal year end on September 30 is likely to expose a number of very nasty and contentious problems. We still view the odds of a significant correction as fairly high and believe there is considerable complacency among investors who seem to believe that either the Fed somehow has this all under control or that some miracle will occur later to solve the current Ponzi bubble. We will take a quick big picture look at two key major index ETFs, the SPY for the S&P 500 and QQQ for the NASDAQ 100. Monthly charts of these issues show some very interesting and thought-provoking patterns that should cause equity investors to examine their fundamentals and evaluate the current risk-reward trade-off. Looking first at the monthly SPY, we see clear seasonal patterns with a number of major market swings having occurred in the September to November seasonal period. And less obviously, because I didn't label it, the March period has also been a significant trigger. In addition to seasonality, the last two major SPY rallies hit resistance at trend angles that appear to be recurring today. We have an extended 9-wave up pattern in force and possible rising wedge that add further technical concerns in SPY. There is a resistance zone just overhead that represents a 100% extension in price of the major first leg off the 2009 low. Switching to the monthly QQQ, we see many similarities, although the NASDAQ has managed to regain less than half of the major tech bubble decline, so arguably it has more natural upside than SPY. The Qs show similar fall seasonality, the same extended 9-wave pattern with a rising wedge that is approaching an extension of 161.8% in price that could be formidable resistance. In short, we see a number of technical and macro concerns that lead us to the conclusion that it is dangerous to chase stocks based on the premise that Fed policy has a put under stock prices, and we would exercise considerable caution as we approach the traditional fall volatility window. Thanks for watching, and visit us often at BreakingCall.com.